talking about all the things we want to do in the new year. In addition to losing weight and getting organized, many people resolve to take control of their finances at the beginning of the year. So here were some keys to developing good financial habits. Please welcome best-selling author, entrepreneur, and financial expert, McCarthy. Hi.
Hi.
Thanks for being here. This is a great time of year to sort of review and plan ahead, right? So where do we begin? What's your first step?
Well, the first thing I would say is to invest in yourself. That means give your employer a call and ask if they have a 401k plan. Many employers match what you contribute, and that's free money.
It is. Even if they don't match, is it a good idea to have one?
It is a good idea. You want to invest in yourself and plan for retirement in advance, and the younger you can get started, the better. And if they don't have a plan, take a look at some Roth IRA options.
Now, what is the difference between the 401k and the Roth?
Well, one is administered by your employer and the other is administered by yourself or whoever you've hired to do financial planning for you.
Are they both pre-tax?
No. Well, pre-tax money will go in, but with a Roth IRA, all of the growth is tax-free.
Oh.
Yeah.
Whoa, wait a minute.
Yeah.
I might have chosen the wrong thing. Your second tip, it seems like everybody would know this, but obviously we don't all do this. Live within our means.
Live within your means. Everyone should take this time of year to look at every bit of income that they got last year from all sources, not just their job, but maybe gifts and things like that. And also look at their spending and sort the spending by category: housing, transportation, entertainment, food, clothing. Once you do that, try and see if you can create some changes so that you're spending less than you're making.
Is it, if you don't have a good way to do that, to go back and see where you spent all of this, what do you suggest? Do you keep a journal for a month, or how could you really keep track of this?
You know, you can actually, with all of the online tools that are available through banking, you can see when you've taken some cash out of your account.
Figure out what that was for.
And figure out what it was for. Do the best that you can to figure out how much you spent in each category. And that will help you with the next tip.
Which is?
Which is to go ahead and monitor your progress monthly. All right, and make sure you're reporting to a friend or family member. There are so many online tools available that can help you to establish a budget. Mint.com is a simple one that just walks you through it.
MINT?
MINT.com, and there are a number of others. But take a look at that spending and that income and input it into a budget. And then report to a friend or family member once a month after you enter the actual spending and income that you have each month throughout 2017, and monitor your progress. I find that when you have to report to somebody else and be accountable, it motivates you to stay on track.
It changes everything, doesn't it?
It does.
You also suggest that we reduce consumer debt. Now that is credit cards. Is it also car payments and that sort of thing?
Any consumer debt that you have that is credit card related, usually transportation, mortgages, and car payments and stuff, you've budgeted for that. Those are things that you really need.
Those are fixed, and we know that that's going to be coming each month. But credit cards make it easy, especially, you know, I have a young son who's just started to work, and so, you know, getting him to keep track of this was really helpful, not to think, oh, it's free money, I have a credit card.
Right.
How best do you reduce that?
Well, the very first thing you want to do is take a look at all of it and determine which is the highest interest rate. Start to pay that down first.
Okay.
And if you find that you've got so much, you might want to even consider another part-time job that's temporary, just so that that income can go towards paying that debt down. Another tip is to call the credit card company with the high interest rate and let them know that you're very concerned about refinancing this, and before you investigate other options, would they be willing to reduce the interest rate?
Now,
and many do.
So you've got a chance of success with that.
You do.
But you might as well ask, and can you move that amount to a lower rated credit card?
Many other credit card companies do allow you to do a transfer when you open an account. But keep in mind, the more accounts that you have open with debt, that's going to adversely affect your credit rating. So be careful about that. The goal is to pay that debt down so that you're in a financial position to easily live within your means.
Okay. And then you say consider buying versus renting. And I'm really curious about this because people are so concerned these days about, what happens if we have another, collapse and you owe more on your home. People went through such a bad
Sure.
experience in 2008 and 9.
Well, I will tell you that just last year, home prices have appreciated almost 20% here. Imagine, can you have a better savings plan than a 20%
No.
increase in a year?
The market certainly
Exactly.
didn't, yeah.
So take a look. Once you've paid down your consumer debt and once you have been living within your means, take a look at what the rent payment is that you're using every single month, and go online. There's a mortgage calculator available online. Very simple ones. You can call your bank and make sure that you put in the exact amount that you're spending for rent so that you can see how much you could afford for a home. There are additional tax benefits that you get by owning a home, and that will reduce the net that you're paying every month for that home.
Will those sorts of figures take into account your taxes and the other costs of owning a home?
It will.
So that you can, good.
You want to put all that information into the mortgage rate calculator to determine really what level of home you could afford.
Great. Thank you very much.
You're so
Appreciate
welcome.
it. Those are great tips, and we'll, of course, have those online as well. Thank you, May. Coming up next.